So please, you have to send the information to your colleagues. All of you, not only Alexander. Daniel Adu is on board, Brainford, Okra, and the rest, Doreen, Boatin, all of you. Just, I send information to the course rep. His phone is off. If you have her number, if you have their numbers, two of them, call them that, or you can send them the new link so they circulate it to the other people to join. So we are giving ourselves just about between 3 and 5 minutes, then we start the lecture, by which time all the people should join. Okay, I think we can start. I mean, even if we wait till the day ends, the same people who want to join are the people who want to join. Okay, today's topic is internal audit. You've heard about internal audit and internal auditing. So we want to know officially what internal auditing is about and how internal auditing works hand in hand with external auditing. The purpose of internal auditing, how internal auditing can even assist the running of the business and the external auditing. So basically, plus some other thing, that's what we'll try to understand. Plus some other thing, that's what we'll try to Okay, so before we start today's business, we have already held lectures on audit risk. There was a small part of the audit risk lecture that we couldn't finish. It was basically about please, if you have your microphone on, let it go off. Alexander Ban, put your microphone off. Alexander, put your mic off. It is giving us bad interference. Okay, so before we look at today, we want to try to do some review of what we have done already. Last week, we were talking about audit risk, and we put audit risk into perspective. Now, everybody should understand audit risk, what it means. And our main work was to identify events, situations that give rise to audit risk as part of our planning. As part of our planning, we should be able to, based on the information we have gathered about the client in our preliminary assessment of risk, we should be able to guess what issues will give rise to the risk of material misstatements in the account. That's what we call audit risk. And we did a tutorial on it. We took a question together as a class, and I have provided a solution to that question, recorded it, and the most part of the recording was audio because you already have the question. So I have given very detailed explanation of all the issues that we can identify as audit risk. You can also have your own, and let's compare, then we get a complete solution. So I'm encouraging all of you to watch that video, and I attached a solution in the form of text PDF that should go with the audio recording or the video recording, anyhow you want to call it, so that it can give you the complete picture. Subsequently, the semester is almost closing, so you will get most of your lectures in video like this one, and there will be series of tutorials trying to explain certain things that I think needs to be explained ahead of the end of semester. So if you haven't subscribed to the YouTube channel, just for you not to be late, just for you not to go into a situation whereby you will say, oh, I didn't see the tutorial. You can subscribe, and in the meantime, please, you can spend some few cedis to keep your data on so that you get alerts, because you are in an environment to receive information. And you always put your phones off. If there's an alert, you don't get it. Some of you are not even subscribed to any of the platforms that should give you information about what we are doing. That is your own decision, please. You don't do any of these things for me. You do them for yourselves. So if you decide that you will not put yourselves on the platforms for you to get alerts on what is going on, fine. So we'll do series of tutorials and put them on the YouTube channel ahead of any exam, either quiz or the main end of semester exam. So you have to get yourself registered on that platform, please. Okay. So that is just by the way. Let's look at what we can do today on internal audit. Most of us know already about internal audit. Already, we have heard something about internal audit. Okay, so let's try to start from there. What do we understand by internal audit? When we say internal audit, what comes into our mind? What is internal audit? And please, we don't have so much time, so let's be quick. Just say what you know, and then we build on that and move forward. Internal audit. You can just mention your name. If you want to talk, mention your name, and then you talk. Internal audit. What is it? Wajiya Domnina, what is internal audit? What do you understand by internal auditing? Nina Buachiyadom. Buachiyadom Nina. Absent. Felix Amiyao. Say what you think about internal auditing. I'm your Felix.
Yes, sir.
So what are you guys doing? Do you log in and just go and stay somewhere?
No, please.
Okay, so why is your response time so, I mean, it takes so much time for you to respond? I was asking of internal auditing. What comes into your mind, internal auditing? Yes, Musa. Musa Sam, say what you think about internal auditing. Musa, Kwajo Denchra, your hand is up.
Okay, sir. I read that internal auditing it's a monitoring and appraisal activity established as a service to the entity in question.
Okay, thank you for that attempt. So internal auditing, you remember when we were dealing with corporate governance. In fact, when we were starting the whole business of auditing as a course, we said that over the years, corporations have experienced what we call corporate failures. And investigations into most of these failures, especially the bigger ones, is revealing that inside the company, so many things are worse. And from the assignment I gave you, if you are reading the information I supplied, you will come to the understanding that there were a lot of issues. And all of these issues have been put together. I mean, the recommendations on dealing with these issues have been put together into a framework which we call corporate governance. This is how we have to do things. This is how we have to do this. This is how we don't have to do this. All put together corporate governance framework. So corporate governance simply is the structures, policies, all the things that we need to do to make sure the organization becomes successful. Corporate governance. And the responsibility of corporate governance, responsibility of corporations becoming successful is entrusted into the care of the board and its management. So if the board can achieve this bigger responsibility of making sure that the company they are directing and the company they are managing is on track towards achieving its objectives, then they themselves need to set up a lot of systems, do a lot of things to make sure that the organization achieves its objectives. And part of these systems that they will set up is internal control system. Sorry, internal auditing. We'll talk about internal control later. Internal auditing. So like he said, internal auditing is a monitoring activity. It is a system that management and the board, for them to carry out their mandate of making the organization successful, set up in the business so that it can monitor all the other controls that we have put in place to manage the risk that can make the organization go bad. And also the risks that can make the organization do well. I'll explain what I mean by that. So that's the meaning of the internal auditing being a monitoring function. The organization will put in a lot of systems, a lot of controls that should prevent bad things from happening. So that is part of management of risk. Downside of risk, bad things. The organization will also put in place systems that will manage upside risk, things that will enhance the organization's achievement of objectives. That is upside. So risk has two sides: upside risk, downside risk. So that's what you have to think about risk. Upside risk, downside risk. So downside risk is the negatives, things that will mitigate against the achievement of objectives. Upside risk are the positive risks, things, they usually, present themselves as opportunities, yes, in the external environment, opportunities. So the organization will put up systems to capture all the events or all the situations representing upside risk, capture all situations representing downside risks, and manage them to the advantage of the organization. So you understand what the management of the upside risk will be. Just maximize them, take advantage of them. An example of an upside risk is where there is a government policy that favors your business. Yes, it's an event in the external environment, but it is actually creating an opportunity for you to do better. It could be a government policy on free SHS, and let's say you are a sewer, you're a dressmaker who makes student dresses, and look at the upsurge in the population of students, just tripling, quadrupling, and so on and so forth. So the hundreds to thousands that were in our various homes, in the villages that were not schooling, they are all now coming to school, and they will need a school uniform. So it's a big opportunity for you to chance on, to maximize your profitability. That is an event that came from the external environment, government policy, which is creating a positive risk. So you have to see risk not only from the negative perspective. Otherwise, you'll be thinking only on the negatives for you to forget about the positives. So that's an example of an upside risk. Downside risk is something happening. It could be the same government policy, and it is mitigating against your success as a business. For example, the same government policy on free SHS. Just look at what that policy is doing to private schools. It's nearly collapsing most private schools. The only way most of them can survive is probably to merge, so they can get some number to break even. That is even break even. All right. And as a business, you have to be tracking all of these things happening, both in the external environment and inside of your own business environment. The things that can create an advantage for you to do better, the things that can cause you to lose. You track them, document them, have a profile of them in terms of the likelihood of those things happening, and if they do happen, the impact. Then you try to manage that. So if you get to know them ahead of time, you can always do something to reduce, at least, if not to eliminate. Yeah. So the organization will have to do so many things to kind of do this risk management, just to get the organization successful. And one of the things, because we have our eye on one of the things that they will do to kind of manage risk to make the organization successful. That is by setting up internal audit department. The internal audit department, like you said, is going to monitor all the other systems that management has set in place to manage risk to the advantage. Plus, it will do more. So we have talked about how the concept of internal auditing links with corporate governance. Corporate governance requires that the organization have structures in place to manage the organization well so the organization becomes successful. That's the corporate governance aspect of it. And for there to be that corporate governance, there needs to be a structure like the internal audit department, which becomes involved in managing risk, which becomes involved in monitoring the systems that the organization has set in place, and make recommendations for management, for improvement, for changes, and so on and so forth. So internal auditing is very important, but as we all can see, not all organizations do have internal audit departments. At least for University of Cape Coast, we do have internal audit department. All the big universities in Ghana, they do have. Maybe it is just because it's a government setup and maybe by government policy, they should have one. But look at the private universities. Which private university do you know to have internal audit department? You can share that information with us. Hello, please, it's a question. Which private university do you know to be having internal audit department? Okay, so that means nobody knows any one of them. Myself, I don't know anyone. So why is it that if internal auditing is so... Kwajo Denchira, did you want to talk? Kwajo?
Yes, sir, I know about Ashesi University.
They have, right? Yes, Ashesi will have. But apart from Asashi, if you take... I know of few private universities. I know Baptist University College. They don't have. I know of there's another private university in Winneba. It is owned by this this churchman, as Ajinasari. They don't have internal audit department. But so the question is, if internal auditing is a good feature of every business, it helps the organization to achieve its objectives. Why is it that some organizations choose not to have internal audit department? Okay, so by that we are going to talk about assessing the need for internal audit. There could be some good reasons why they don't have it. Having it is a good thing though, but it's not always the case that they should have it. These are some of the factors that are usually considered whether an organization should have an internal audit department or not. And if you are following it from your textbook, you can just see, I'm just reading the bullets. They are just straightforward. The cost of setting up an internal audit department versus the predicted benefits. So cost versus benefits. If the cost of setting up an internal audit department, the office, the people, the employees you will have to put in the office, other logistics, if you put all of them together and you assess it against any perceived benefits, maybe it's a small business and the scale of operation is even not too big. You will have to set up a whole office, employ people, buy gadgets, and so on and so forth. With what benefit? The benefit could be very minimal. So based on cost versus benefits, it might be yes or no. If cost is more than the perceived benefits, then organizations can choose to say no to internal audit in the meantime. If the reverse is true, then they can do yes. Another thing that we may have to consider in assessing the need for internal audit in every organization is the predicted savings in external fees. If before setting up the internal audit department, we have been consulting external firms to do some business for us, business around internal audit, because we don't have one. Now that we want to set up one, we have to look at any cost savings, because once we set it up, we will not give contracts to outsiders again. They will be carried out by the internal department. So we can look at the savings in cost that the organization can make, because now the internal department will do those jobs. Is it a massive cost saving, or is just some insignificant amount of cost savings? That can also be considered. The complexity and scale of the organization's operations. And it's very, tied to the first point. So 3, we can talk about cost, complexity and scale of business operations. If the organization is very large, like University of Cape Coast is, very large, like University of Ghana is, then just by the size, and that's what we mean by scale, just by the size of the organization, internal auditing or internal audit department may be needed or is needed just by the size. And the size normally also comes with complexity. Just look at University of Cape Coast, a lot of schools, a lot of departments, so many activities happening. If there is no internal audit department to track the transactions, the accuracy, errors, fraud, then so many things could be swept under the carpet. Management will not be able to see. So the size normally also comes with complexity. Sometimes the organization could be small though, but the nature of operations is such complex that even though it is a small organization, we still have to consider having an internal audit department to manage the complex transactions that happen in the organization. We can also look at the ability of existing managers and employees to carry out assignments that internal audits may be asked to carry out. So if the existing employees and management, what internal audit department will do, they already have the skill and the time to do it, then we may not need the internal audit department because we're already doing it through the normal employees and management. But if we don't have that situation, then we may have to consider setting up an internal audit department and employing specialized people in the area of internal auditing. Management's perceived need So 5, management's perceived need for assessing risk and internal control. So this is one key factor that drives whether an organization will have an internal audit department or not. If management does not see risk management to be a critical issue for the success of his organization, then he will not have any good thinking about internal auditing. If we have the kind of management where they see risk management as a key building block for the success of the organization, they will be inclined more to have an internal audit department, regardless even of the size of the organization. Whether it is more cost-effective or desirable to outsource the work. So internal audit department carried out by ourselves versus outsourcing. In most countries, we will have a lot of consultancy firms specializing in internal auditing, and they have acquired extensive experience, extensive know-how, extensive resources in all directions for the job. So they can do the internal auditing job very accurately, very superb, with a minimal cost. So if we have that kind of competition, then we may think that there may not be the need to set up one for ourselves. We can just outsource. But of course, outsourcing comes with its own problems. We'll look at the problems that outsourcing internal audit department comes with. The first one that I think is even coming to your mind is the fact that it is risky for outsiders to know about what is going on in the organization, because they can leak your competitive information. That's the key danger. But still, this is something that people can consider in terms of whether they should have an internal department or they shouldn't have one. If they think outsourcing this is more lucrative for them, they choose not to have one, but outsource it. Okay, so that is assessing the need for internal audit. It is recommended that even if the decision is that you should not have internal audit department now, based on all the considerations we have talked about, good corporate governance requires that you regularly assess the need to have one, because situations change from time to time. So yesterday, things were pointing to the fact that it is more helpful not to have an internal audit department. Tomorrow, the picture will not be the same. So that regular assessment will always make you know when to have one if you don't have one yet. Okay, now let's talk about distinction between internal audits, internal auditing, versus internal auditing and external auditing. Right. This one, most of you can talk about it. We don't need to actually even lecture on it. So let's try to talk about the few ones that we can talk about. The differences between internal auditing and external auditing. Those ones we know, then we add to that one. So who wants to say something? Differences between internal auditing and external auditing. Boachi ya Domnina. Nina. Nina Boachi Yado. Okay. Derek Boadu. Derek Boadu. Boadu Derek. Kwajo Denshra. Kwajo, your hand is up. You can talk.
Okay. Internal audits are conducted throughout the year, like occasionally throughout the year, but external audits are conducted just once annually.
Okay. External audits are conducted mostly on an annual basis. So sometimes the wording needs to be a little flexible. Some external audits, depending on, the arrangement between the company and the external auditors, it can be carried out not annually, but maybe in smaller time interval. So you have to use an expression like mostly or usually. So you're talking about the usual thing, not the few extremes. So that's a good Kwajo, a good thing. Who else wants to talk? Patricia Segbethia. You just joined, so let's give you the chance to talk. What do you see as a difference between internal auditing and external auditing? Patricia. Yeah, Patricia, we are discussing the differences between internal auditing and external auditing. Kojo Dentra just told about the frequency of auditing. He said internal auditing can be carried out throughout the year in the organization. It's like a continuous exercise. But external auditing, usually it is done on an annual basis, which is not wrong. What do you think, Patricia?
Sir, I also agree.
Are you Patricia?
Sir.
You are a female or male?
Yes, sir. Yes, sir. I use the email to join. The phone rather.
Okay. So you have hugged someone.
No. No.
Okay, so now you are Patricia in the class. So what's your real name?
Yes. I'm Daniel.
Daniel, okay. Yeah. Daniel, let's listen to you. What do you also say?
So I just joined, but like what I know about the internal audits is they are mainly appointed by the board directors so that they will make sure that control mechanism are put in place.
Okay, so from what?
What
did you say your name was?
Daniel.
Yeah, Dan. From what Dan is saying, what he wants to, Brentford, I'll call you after this. What Daniel is saying is that on the basis of relationship with the company, internal auditors are employees. They are part of the same company. And external auditors, they don't have any relationship with the company. They are not employed by the company. They are not staff of the company. That's a very key difference between the two auditing, bodies. Brentford, you had your hand up. Brentford, you had your hand up. Brentford Okra. Okay, so let's talk about the remaining. All that you have said.
Hello, sir.
Yeah, Brentford, we are listening to you.
Okay, sorry to drag you back, but I wanted an explanation on the outsourcing. I wasn't really clear with what you said now.
Okay, I said that Outsourcing simply means that instead of doing something in-house, you can choose to give that job to another company which are specialized in doing the same thing. So for example, here in Ghana, instead of UCC employing its own staff to clean washrooms and to maybe weed the environment, we have a company that has set itself up with all the necessary tools and employees to do that kind of job, Zoomlion. So we could have outsourced the cleaning work in the university to Zoomlion. So what we were saying is that if you have such a situation where we can have two alternatives, doing it ourselves or making a specialized organization do it for us, that is a factor that can determine whether some organization will have an internal audit department by itself or it will not have one by itself. So if, let's say, they deem it more profitable and maybe more important in all senses, maybe cost-wise, superior service-wise, to make an outsider, the specialist outsider, do internal auditing for them, then they wouldn't see the need to set up internal audit by themselves. So they will give the work to a consultant. That will not strictly mean they don't have or they don't do internal auditing. So we are saying they will not have internal audit department, but they will still be doing internal auditing, but done by an external person or external body. Are you okay, Mr. Okra? Mr. Okra?
Yes, sir. Thank you very much.
Okay. Okay, so now let's run through everything we are doing is just in your textbook. So after the explanations here, you can just go and read. The differences between internal audit and external audit is captured on some block points. So the first one is objective. The objective creates difference between them. What is the objective of internal audit? Objective of external audit? Objective of internal audit is designed to add value and to improve the organization's operations. We said it from the beginning that it is just because management wants to carry out its mandate of managing the organization successfully. That's why they set up internal audit. So that's the objective, to add value and improve the organization's operations. External auditing doesn't do that. It doesn't care about that. External audit is to enable the auditors express an opinion on the financial statements, not about the operations of the organization. Whether the financial statements are right or wrong, that's what they do. So by objective, that's the difference between them. Reporting. And the reporting, someone says something about that, but let me read so we can add something to that. By reporting, internal audit reports to the board of directors through a standing committee of the board. That's the audit committee. See, the board is normally grouped into committees: audit committee, remuneration committee, appointment committee, so that each one, they break the work for themselves, it becomes easy for them. But it's still the board. The audit committee is the board. Remuneration committee is the board, just that they have regrouped themselves into these committees. It is recommended that internal audit, for them to gain independence and not be bullied by management, because they are going to assess management's work, appraise management's work. And management is their superior. Management can sabotage the internal audit staff. They can even cause their dismissal. So how can you negatively report, give a report to your boss, and the report is negative about the same boss, what do you think will happen? So for a good corporate governance, or as a good corporate governance practice, the internal audit department is required to report to the board, because the management is under board. Management reports to the board. Board is the bigger boss. So report to the board. And mostly if the organization has an audit committee, which is a standing committee on the board, the internal audit will report to the audit committee, which is the same as the board. But the reporting of external auditing is not the same way. External auditors are employed by the shareholders and they report straight to the shareholders. Scope of work. Internal audit work relates to the whole of the operations of the organization in terms of risk and controls. The scope of work for the external audit is only the financial statements. The external audit work relates only to the financial statements. The only time operations may come in is where the operations relates to the the financial statement. Otherwise, it is never the focus of the external auditor. Relationship with the company. Internal audit staff often are employees of the same organization, the same company, except where the internal audit work is outsourced. And we have talked about outsourcing in brief. Except where it is outsourced, and in fact, many internal audit departments are not outsourced. Many of them are in-house. So largely, the staff of the internal audit department are employees of the same organization. That is the relationship of the internal audit department with the organization. It's the same organization. They work for the same organization. They are staff of the same organization. External auditors are independent of the company and its management. And that's why they are appointed by the shareholders. Okay. Planning and collection of evidence. The planning by internal audit department will be more strategic and long-term planning, because it has to do with the total success of the organization. And they may proceed their audits the procedural way rather than the risk-based. Their evidence mainly comes from interviewing staff and inspecting documents and appraising systems. So that's how their planning and evidence collection normally features. For the external auditor, planning carried out to achieve objective regarding truth and fairness of financial statements. Just straight to that point. So it doesn't cut across and it's not long range as the internal audit department will have it. The external audit work is risk-based. They use a risk-based approach to carry out the audit. Evidence collected is done through variety of procedures using international standards on auditing and other methodologies. Okay, so that's the difference in terms of how they plan and collect evidence between the two. So that's pretty easy thing to do. The examination, this part of the topic may be the part you can get easy marks. because just recall, except where the examiner tries to set case-based questions in this area, and that can easily be done. And I told you for a typical auditing, exams, at least about 80% of the questions will be case-based. So that's, you need to form your mind around that. Another difference that we can create between internal auditing and external auditing is on the basis of how they are regulated. If you look at internal auditing, they are not regulated the same way as external auditors are regulated. In fact, there is no legal requirement associated with becoming an internal auditor. You don't need to charter, as they call it. You don't need to belong to any professional body. If you come to University of Cape Coast, for example, majority of the staff forming the internal audit department, they don't have any professional affiliation. But they are internal auditors. They belong to the internal audit department. This is not the same with respect to external auditing. For you to become an external auditor, you need to meet strict requirements. You need to be a professional accountant. What we mean by a professional accountant is that you need to have gone through exams, passed, gone through experience, and a professional body like ICA Ghana, ACCA, any professional body recognized has endorsed, certified you as an accountant before you can do external auditing. So that's another difference we can see. And that same difference also talks about how the two auditing bodies, internal audit, external audit, are regulated. Okay. Now let's talk about the scope. We have talked about the scope in some way, but let's make it more to the point. Scope of internal audit function. When we say internal audit, what's their scope of work? What are they set up to do? Two main tasks: ensuring that the company's risk management systems are intact, they operate effectively. The totality of the company's risk management systems. Is intact. And just a follow-up from that is to ensure that any strategy that the company implements in respect of business risks also operates effectively. So about the whole system and about strategies that the company set up to manage business risks. From the previous lectures, we have come to understand what business risk generally means. Business risk generally means anything that can cause a business to fail. It's a business risk. And it is part of the scope of the internal audit work to ensure that the strategies that the company is implementing to manage business risks are effective. And how does the internal audit department do all this? This risk management and then the business risk management, the overall risk management system of the organization, and then more specifically business risk. How does it carry it out? First of all, it does it through one, the mere existence of an internal audit department helps in managing some of the risks, like the risk of fraud. Okay, but deliberately, the internal audit department manages the risk by assessing all the internal control systems, appraising all the internal control systems for effectiveness, for adequacy, and making recommendations to management for the appropriate decisions to be made. Okay, so that's the scope of work, mainly about risk management. And they do it by appraising systems of risk management, assessing them for their working, for their effectiveness. The main system of risk management in every organization will be the internal control system. We set up the controls to manage errors and fraud mainly, and other risks. The reason why it doesn't end with just the internal control system is that the internal control system is mainly internally focused, but there could be a lot of risks coming from outside. So if you like, we will need external control systems as well, because we have internal control system. So the totality of internal control system and, if you like, external control system is the overall company's risk management system. And the internal audit department needs to make sure that such systems are working effectively. Let's read something on responsibility of internal auditing and responsibility for fraud and error. This is an important thing to note. The reason why it's important is that the other lecture we made mention of a concept called expectation gap. Who remembers what we said about expectation gap? Expectation gap.
Sir.
Yes,
Sir.
your hand is up. Please talk.
Yeah.
Expectation gap.
Sir. How many people are talking? Yes, sir. Yes. Expectation gap is the difference between what the auditor do and what people think the auditor do.
Okay, what the auditor does and what the general public think the auditor should do. Okay, good. Who wants to add something? So basically, it's about what officially or professionally the job of the auditor is, the external auditor is, and how the court of public opinion is judging the auditor's work. The public thinks that once auditors are with this company, nothing bad should happen to the company. Because after all, the auditor said everything is good. If everything is good, why is it that in a few years' time, the company that has everything good is collapsed? But that's not the point. The auditor might still have done his work professionally upright, and the company can still collapse. And by now, you should understand why it is so. So that is part of the reason why it is important for us to note the responsibility of the internal auditor for fraud and error. And we'll try to contrast the external auditor's responsibility for same. External auditor's responsibility for fraud and error compared to the internal auditor's responsibility for fraud and error. Fraud originally is a business risk before it can become an audit risk. So the primary responsibility for the risk of fraud lies with those charged with governance of the company. And they are the board and management of the company. It is their responsibility to deal with the risk of fraud. And they deal with it. How do they deal with it? Part of how they deal with it is the setting up of the internal audit department. So internal audit department then becomes directly involved in the management of the risk of fraud. And they are charged that responsibility by management. External auditors do not have any primary responsibility for detecting fraud in the organization, even though they will set up their audit procedures in such a way that if there are fraud happening which materially affect the accounts, they should be exposed. But the primary responsibility of dealing with fraud lies with management. And management may deal with fraud by setting up the internal audit department, whose job is it to manage the risk, the business risk, which has fraud as part of it. Internal auditors can help prevent fraud by carrying out work on assessing the adequacy and effectiveness of internal control systems. So if they assess, and by the assessment and recommendation, and the internal control system in the organization is robust, then all other things being equal, fraud cannot happen. So that's how they help in carrying out the responsibility of management in managing the risk of fraud. Apart from, tackling the risk of fraud from the control side, we have already said it, the mere existence of internal audit departments may act as a deterrent to fraud. There are some people who, when they hear the word auditors are coming, it's like police people are coming to arrest them. So just that feeling can, at least reduce the level of fraud in the organization. All right, so internal auditing is a good thing, but it also has limitations. Let's talk about some of the limitations of internal auditing. Limitations. So let's brainstorm. What can you pick as some of the limitations? This one you can just pick some of them. Just think, don't think too bookish. Don't think so formal. The problems are just around you. So internal audit, we have talked about it. We all understand it, at least to some extent. This is what they do. And this is how the setup is like. So what can you identify as some of the limitations? Yes, please talk. Yes, who is talking? Yeah, Kojo.
So I think a shortage in staff might limit internal audits, or maybe incompetent staff might limit internal audits.
Please come again. I didn't get the first part.
I think a shortage of staff might limit internal audits, or incompetent staff might limit it.
Shortage of staff. Okay, shortage of staff. I don't really get it. But the second part of it is a good point. Incompetence. And why are you picking incompetence? And this is how you have to write it. You have to write, because you are level 400. And when you finish this course, you are capable of at least becoming a second highest person in any internal audit department, at least second highest, second bigger person, if not the biggest person. So your knowledge, you have to read well to get it to a certain good level. Incompetence will come in because when we're talking about the differences between internal audit and external audit, one of the difference was on regulation or professional requirements. And we just found that internal auditors are not by any means required by any regulation to belong to any professional body. They don't need to become chartered accountant. They don't need to. It's not a requirement. But the external auditors are required to have that. That's the difference between them. So if internal auditors are not required to have any professional qualification, to have any level of experience and exposure before they become internal auditors, that's where the incompetence can creep in. So you can have a whole department of internal auditing where they are just rubber stamp. They are just, existing as workers and taking money. They don't do anything. And that limitation is because of the way internal auditing is for now. Maybe in the future, things always change. They may be required. For so many years ago, they used not to have any professional body. But for now, they have international body for internal auditing, which they belong to. At least that body will pass some regulatory documents, some standard that should guide their work, which is making it better than before. But the truth is that they are not made to go through any stringent procedures to get knowledge, experience, and so on and so forth. So that can be a limitation. They might not have the requisite knowledge to do the work well. What other can we think? So thank you very much, Kojo. What other thing can we say as a limitation? If you want to talk, you can just mention your name and then talk. Or I'll mention your name for you. Abigail, Abigail,
Yes.
are you in class? Or yes. What other limitation can you cite?
And please, I find that there may be partiality, especially
How?
when the auditor is reviewing its own account. That's self-review.
Okay, that is not bad. So what Abigail is trying to say is that because so Abigail should have said this one first. So let me say that one, then I'll talk about Abigail's point. One of the limitations is that internal auditors are usually, except where that function is outsourced, they are usually employees of the same company. So how can you be critical of your own company? And even where they are even bullied and they are afraid that management will sabotage them, then any findings, all the findings that they can do, they can get in the company are things that are good about management. All the bad ones, they will not see them because they don't want problem. So that's one big limitation. The independence of the internal audit department. How can you ensure that required independence of your own bosses? Then on top of that, Abigail's point comes in. Because they are staff of the same company, normally they are involved, especially where they have some specialized knowledge. They are involved in setting up the internal control systems. even though that's not how it's supposed to be. They are supposed to be there, and then when the departments themselves have set up their controls, they assess the controls and give feedback to them. But in practice, the internal audit department can be involved in setting up controls. They can be involved in setting up risk management systems. And they are the same body which is also tasked with appraising the systems. Then you'll be self-reviewing like she is trying to do. And that is a limitation. And this is how you have to pick the points. And when you pick the point, your argument should come out clear, please. Sometimes I don't get that clear communication. And you will lose mark because the one reading your script doesn't really get the point. And you cannot see what is in your mind. So let's see what is in your mind on the sheet of paper. Okay. So these are the key limitations. You can think of other ones for yourself. These are the key limitations. Then the last part of internal auditing that we need to do, that part of the reading to you as an assignment. It's very straightforward. Internal audit assignments. The various assignments that management and the board normally assigns the internal audit department to do. We have what we call value for money audits. So you have to read, is on page 98 of your textbook. Read on value for money audit. You can also read from other books on what value for money audit means. Value for money audit has some key features. You have what they call 3 E's: economy, efficiency, effectiveness. And that kind of concept came from the public sector where they are not profit-oriented. So they audit the superiority of their service on the basis of economy, efficiency, effectiveness. Go and read about it. Value for money audit. It's one of the assignments, one of the works that the internal auditing department can be assigned to do. We also have...
Sir, please, the page number again.
The page number is page 98. That's internal audit assignment. But the page for the whole of the chapter we are dealing with, from the textbook I gave you, if it is from other textbook, I wouldn't know the page. But from the textbook I gave you, that will be from page 91. Page 91 starts the whole business of internal audits, and with all the things we have discussed. So you have to read over it. You can also read from other sources if you think you have to do that.
Okay, please,
so apart from value for money audits, internal audit department can also be assigned to carry out information technology audits. So that is basically IT audit. And that may be the case where the internal audit department has some good knowledge in IT, or we have some people in the internal audit team that are very, very good in IT. Then the board and management can give them a task to carry out information technology audits for them. That will be just to audit. The information technology will be more computers, software, those things. So the audit will be more of things like password controls, validation, access controls, validation, and if it is software, some controls that are embedded in the software, like is the software able to calculate? Some softwares are made to automatically calculate. Most of them do all the things that human beings will do. Are they able to do them accurately? So they will assess all of those controls to make sure they are good. That's information technology audit. Read the details in the book. They are not detailed, just very few texts, and you're okay. It can also be assigned to do what they call best value audits. It also is a local, government, local authorities framework, best value. And the idea is not really, profits focused. In the public sector, they just render service that has value. They don't have the intention of making profit. So they will not judge their performance by how much profit they make, but by superiority of the service. And by superiority, best value audits have these dimensions: challenge, compare, consult, compete. So when you read, that is what they call 4Cs. When you read, you will get the understanding of best value audit and how the 4Cs connect. Then the usual thing that you will normally think of when we say internal audit is what we call financial audits. That's the usual work they do, financial audits. And that financial audit is very similar to what the external auditors do. So testing controls responsible for the accounts, financial accounts, the vouchers, all the things that they do, and including even the financial reports before the auditors even come in. So key things that you need to know of financial audit is revenue and cash collection. They will look at the controls, look that everything there is correct, acquisition and expenditure, production or conversion. So inventory planning, storage, and all those things. Financial capital management, paying interests and dividends, purchases, personnel and payroll. Those who are starters, leavers, authorization of payroll rates, additions and deductions, blah, blah, blah. So this is the building blocks for the financial audit. You have to read it, not too voluminous. Then, last but not least, operational audits. So operational audits will basically be audit of the systems. So sales systems, how is it, or the whole of revenue system, expenditure system, other systems, as we have in every organization. They will carry out audits of how the systems are working. That's operational audits. All right, so when you are able to do that, then that may be okay. Then you can finally read an internal audit reports, how their reports looks like. And that will end internal auditing. No, last one is outsourcing the internal audit function. Generally, outsourcing means we are not going to do the internal auditing in-house. So we are not going to have people on our payroll who are working as internal auditors. We are just going to make another company come and do it, and then we pay them as consultants. So that's basically what outsourcing is. You have to read on advantages and disadvantages of outsourcing, and they are very straightforward. They are even in bullet forms. And if you choose outsourcing, how do you manage an outsourced department? What are some of the things you have to do? Few things there. So that ends the chapter on internal auditing. Okay, if you have any questions, you can make me know about them. We answer them quickly, and then we can go and do other business. Any question? No question. Okay. So this is where we end today's lecture. This is internal auditing. So let me give you overview of what is expected of us, what we have left. We will have to do something on internal controls as a topic by itself. Even though we have mentioned internal control in passing, in connection with internal auditing. So we have to do a whole lecture on internal control systems. And from your book, you can even read ahead of time. If you go to the table of contents, you can locate internal controls. Apart from internal controls, we may have to talk a few things about audit evidence, at least the introductory part of audit evidence, because we will do the practical part next semester. So we'll have to talk about introduction to audit evidence. We will talk about internal control and test of controls. Yeah, at least we have to be able to do that before the semester ends. So basically about 2 or 3 areas, then we will be done. I will actually get them in detail and make you aware so that you can even begin to read ahead of time in preparation for the exam. Okay. Then something brief on whether we should have a second quiz. You just took only one quiz. You think we should have a second quiz?
Please, it depends on the marks.
Sir, please, what was the performance of the first? Then we will know if
seriously speaking, I mean, to be frank, we have gone through it. And sometimes when you are even doing the tests, I patrol, and few of you know, I'll be watching student scripts. I want to get a sense of how they are performing, their approach. Are they on track? So just from that assessment, I guess the performances will not be bad.
Eish.
The performance will not be bad.
Okay.
What? So
Will we get them and then we'll know how it went?
Yes, you will get them. You will get them. We are still in the process of marking. You will definitely get them before you even start exam.
Okay, then how come? So I want to know if you will take another quiz. Maybe the average.
So this is what I have to say.
Okay.
Normally, if you take more tests, it is good for you, the student. Okay. And it is bad for the teacher. It only gives me work to mark. And when you are marking on the 10, it is difficult than any other paper because it is a core that is based mostly on common sense, and it is situational. Different situations, people can see from different angles, and they could all be right. So you need to be careful when you are marking. And people can write bad English too. And you still have to try to make sense of whatever they are trying to write, because I have the understanding that they are not English people. The fact that they are trying to speak in English, they shouldn't be punished for writing bad English. That's my ideology anyway.
Okay, sir.
So it sometimes takes a little bit of time to finish the marking. But the fact is that if you do another one, it will definitely benefit you than if you do just one. And these are where the benefits comes in. If there is a J, for example, does well in quiz 1, but Abigail doesn't do well, Teresa will say, okay, then don't let us do. Definitely there will be some people who will not do so well.
Okay.
So when we have at least one other quiz, sometimes it balances. They also have a way to set off some of their losses. And the most important thing is that if you do a second one, it does what sometimes you don't recognize. It pushes you to learn ahead of the main exam, by which time you're already prepared for the main exam.
Yes, sir.
Yeah. So by that, I think it will be beneficial to all of us. I mean, to you as students, if we plan and do one quiz. You know, the first quiz was just one area. So the second quiz can be maybe another one area or a mixture of 2 areas. The idea is that when you read, we are still preparing ourselves for the end of semester, and it will push us into getting good grades. And that's the project we are doing here. Project of getting better grades. That's all.
Yes, sir.
Sir, please. The other time you said our second quiz we should read from beginning to where we've gotten to. But sir, please can
Abigail,
you
until the
repeat
whole
it?
canon. I can't get you.
Please, can you hear now?
I can hear, but the way you speak, I find it difficult to get exactly what you are speaking.
Sir, please, I'm saying that the other time you said our second quiz we should read from the beginning to where you ended with S. But we want to plead that you allow us to read the topics after the first quiz
After the
so
first
that
one,
we, yeah,
exactly. I'll do that. In fact, I will.
sir,
Yeah,
please, what about
that's exactly what I'll do. So now, um, I'm sure course rep is on the platform. So course rep, we can begin to plan because the semester has ended, though. So we have to write the second quiz as early as possible. We can begin to think about when it is feasible for us to do our second quiz. And then the announcement should go onto your platform for every person to be aware because you have all the information. The textbook is there, other supplementary information are there. So you can read. Other thing, you can read it in your bed. It doesn't involve any calculation that you need to be punching calculators. So you just hold your phone, and the text is even electronic text, or your tablet, or your laptop. Then you are reading even in your bed. You go to library, you read, you solve questions, you ask questions. That way, you will do well in the quiz and do well in the exam, and you will be good. So just let me get the information on when the second quiz will be. Course reps, and make everybody aware of the impending second quiz. Okay. So this is where I rest my presentation if there is no other question.
Thank you,
please,
sir.
what of
What the assignment is also part of the assessment.
Hey, sir,
Yeah.
please, we thought you cancel the assignment for another quiz. Oh.
When did I say that? Or you want to
Sir,
cancel
this
it
one
for
there.
as for the assignment, I can cancel even all the quizzes. The assignment should hold
hey, sir,
Hey,
because
sir.
it's the main
Sir, then take it after exam,
case
sir.
and
Sir, we beg.
it's the main. You see, that's the main means for you to learn the other thing I want you to learn. So you have to read and write it.
Okay,
Hey,
so,
So
sir,
the assignment is carrying majority. It's carrying the biggest weight in the whole of the continuous assessment.
hey.
So if the continuous assessment is 40%, I'll give the first quiz 10%, the second quiz 10%, and the remaining 20% will go for the assignment. That's
sir,
how
my
it
dear,
is.
sir,
Oh, how are you there?
please,
Assignment I'm the more than 1 month ago. No?
the assignment, then rough.
Hey, can say
Men
me.
are quite anything.
Oh, sir, I
Okay,
can
so,
kind
sir,
of, I can
please, the
kind of.
assignment,
The
do you
doors
want us to
open.
write summary of what we have learned, or you want us to link it with cases?
I
Sir,
want
please
you to
explain
do
further.
it just as I have set it up on the platform.
Okay, so should we
The
bring
instruction
cases?
is clear, it is there.
Okay,
Please, let's try to do this. Let's try to be diligent people, right? Don't let
yes,
us
sir.
be people of excuses. It's for lazy people.
No, okay,
Yeah. Let's try to do as much as we can. So
okay,
if that is the best that we can do, it is always good.
okay,
But make sure it is the best that you can do.
yes, sir.
Okay, thank you very much.
Thank
Thank
you,
you.
sir.
Thank you, sir.
Thank you.
God bless you.
Amen.
There is also.
Oh,
Now, man.
cool. Someone on the day.
Yeah. Throw some, give me. Throw some, give me.
Okay, I will pass out to the this is the phone and send it to you.